Good morning. Welcome to Stock Market Today. It's Wednesday, June 24th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today, brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email where we get a lot of the content for this show and also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities finished higher in Tuesday's trading, but faded in the final hours of the day. The NASDAQ Composite Index hit a new all-time high and was up for an 8th consecutive day. Treasuries were little changed to weaker at the back end of the curve. The dollar was under pressure against both the yen and the euro. Gold was up 90 basis points. WTI crude down 90 basis points, but did finish off the worst levels of the day. The narrative that seems to be driving trading here in the near term is better than feared economic reports. Yesterday, we heard that new home sales for May beat estimates, and that's being somewhat offset by a continued rise in new COVID-19 cases in some states in the U.S. Additionally, U.S.-China trade tensions back in the news with some conflicting reports on the status of the deal ahead of trading yesterday. As we dive in this morning, futures are down about 90 basis points in early trading. Asian markets were mostly higher overnight, led by South Korea and China. European markets under pressure here today. Treasuries are stronger across the curve. The dollar is stronger against the euro and sterling, little changed against the yen. Gold up 70 basis points. Crude oil down about 1.8% to kick us off on a Wednesday morning. That shows us that yesterday for the S&P 500, we had a late day fade as the gap continues to provide a hurdle. Here's that opening gap. We've rallied back and thus far have not been able to close it. On the downside, 3,000 to 3,100 remains support, 2,850 to 2,950 below that. The February highs are in play if support holds. So that view is largely unchanged. In the near term, resistance is obviously right here around this 2,150 level, but beyond that, we'd be looking at 3,200 to 3,250 in the near term. We are near oversold conditions, and Shaken money flow is bullish here in the near term and the early going as we get us going on a Wednesday morning. Diving into our market in a minute now, what are we writing about in the note today? Record high for the Qs before selling off into the close. SPY still has that gap to contend with. We talked about it. Sentiment indicators are flat on the week. Options traders do remain bullish. We'll look at that a little bit later on in the show. Equal weight S&P beginning to lag the SPY once again as leadership appears to be becoming more concentrated once again. Futures, as I said, do point to a lower open here this morning. Now, diving into the major indices, from a power bar perspective, not a ton of change for the power bars. The Dow up 45 basis points, 4 to 8 bulls to bears there. S&P 500 adds 44 basis points, 99 to 117 bulls to bears. NASDAQ up 82 basis points, 36 to 14 bulls to bears on that front. Small caps and underperformers slightly, 550 to 270, still a solid ratio as we look there. And then bonds down ticks, sending yields higher on the day. As we take a look now at the power bars across the board, small cap stocks are more bullish than large cap stocks. Major indexes are mixed. Let's hit our stock of the day, stock that I'm highlighting in my note for clients this morning. BorgWarner, BWA, has an interesting setup here as far as I'm concerned. It's what we call a bullish personality change, or the potential for one. What that means is we're going from an underperformer to beginning to outperform as the rating turns bullish here. So bullish rating, strong trend above the long-term trend line. Overbought, oversold indicator beginning to round higher in an oversold position, while Shaken money flow is bullish, indicating that there are signs of accumulation for this stock. So what I see here is a nice rally off the lows, goes into a consolidation, very similar to what we're seeing in the market, right? So I think that if the market can get in gear to the upside, a stock like BorgWarner can work. You do have price-based support down here around the $30 level, which holds the trend line, maybe even a little bit higher, call it 32.5, 30 to 32.5 as a support zone for this stock here in the near term. But when I'm looking for compelling setups across the board, I like to look for names that could be exhibiting that change in personality, where relative strength goes from being a clear underperformer, and then gradual improvement to the point where it begins to outperform. Now, it's early days in that outperformance, but it definitely does present an interesting setup. As far as I'm concerned, I think BWA is worth a look on the bullish side of the portfolio, especially if support continues to hold for the broader market. Let's take a look at our sector tracker now, movement of the major sectors over the last 5 days. And we're back to that kind of what had been leadership for the better part of the previous 12 months leading into the downturn, right? Tech at the top of the list. Again, starting to see some concentration in the big cap tech and comm services names once again. Discretionary doing well, largely a function of Amazon. Healthcare starting to perk up a bit. Remember, that was one where we started to highlight waning relative strength. And if it can start to perk up, that's great. Remember, we showed you the chart earlier this week with a breakdown on a relative basis, but getting close to a support level. So we'll see if it can build on that. In the middle of the road, materials, staples, industrials, and financials, that's your reflation trade for the most part, especially materials, industrials, financials, starting to give some back. Recall that, in my view, that move in those groups had largely been counter trend in nature. So we'll see now if it begins to roll over once again. The yield plays under pressure, utilities and real estate and energy fading after a strong rally, especially here on a relative basis. Again, just a group that I was never really able to get behind in a meaningful way from a trend perspective. Obviously a sharp counter trend move over a month and a half, but bigger picture trend, energy still looks stressed to me, if you will. Let's look at our industry in focus now. This is a group that's not stressed. This is a group that we've been bullish on for a while, and it's paid off over the past 6 months. Software and services has outperformed the S&P 500 by 13.6%. Power bar ratio is very strong, 59 bulls to 8 bears. There earns it a rank of number 2 of 21 subsectors, having moved up 2 slots over the past week. Some of the names there that might be worth a look, dig in, do a little more work: Benefit Focus, BNFT, Mobile Iron, MOBL, and A10 Networks, ATEN, all with very bullish Chaikin power gauge ratings. And if we look at the fund, XSW, bullish rating, strong trend above this rising long-term trend line. There's your ratio. And what I see is, solid outperformance with the intensity of outperformance picking up of late. So bullish fund outperforming, solidly bullish money flow, overbought, oversold indicator, middle of the road and moving higher as it tries to trade to new highs, right? So a little bit of a consolidation here, certainly not out of the question, but if I'm thinking about where is leadership in this market, it's certainly within tech, as we've been highlighting. It's certainly within growth, as we've been highlighting. So, growth, tech, large swaths of the software industry group certainly fit that bill of, growth stocks, tech stocks outperform, and software, continuing to outperform. It's been a group that we've liked. We continue to like it, continue to look for opportunities there, obviously in a selective manner. We want to stick to a process, but software is certainly an area where we should be looking for bullish ideas. Taking a look at what is trending now, yesterday's S&P 500 movers and shakers are gainers and losers. Mohawk, MHK, up 12.6%, despite being downgraded to sell yesterday. So investors seemingly ignoring the sell side downgrade to a sell rating. Stock up 12.6%. A lot of these home builders and home builder leverage names have been doing well. I think one area where you can focus on that to see if that trend is likely to continue is to look at lumber. Lumber's spiked higher here in the near term. So that's an interesting dynamic. Potentially, you've been reading some stories about people wanting to leave the cities in light of Corona and what happened there. And, some of the home building activity has been strong of late. SYY, nothing company specific to drive that stock higher, 6%. DRI, they report earnings tomorrow, stock up 5.6% ahead of that, does have a bearish rating. Norwegian Cruise Line caught a downgrade this morning after being up 5.5% yesterday. The stock is still bearish here at Chaikin Analytics. DXC up 4.8%, nothing company specific to drive trading there. American Airlines down 6% after they priced that deal that was widely publicized. CBOE Downgraded Goldman Sachs takes 4.3% out of that stock. Fortinet down 4%. Nothing company specific that I could see drive trading there. LHX, L3 Harris down 3.7%. Again, nothing company specific there. In Western Digital, same story, down 3.5% on the day. Bearish rating here at Shaken Analytics. Didn't see any company specific drivers for that one. So as we dig in on sentiment, we also look at positioning as a sentiment gauge as well. And fairly interesting to me to see that it's really a tale of two sentiment gauges, right? The CBOE equity options put call ratio remains excessively greedy, right? The 13-day moving average of this ratio is still down here below the levels that were in play at the January and February highs, right? And then we went to excessive fear and then right back to excessive greed. And it's kind of interesting to me as that's playing out while futures traders remain net short. Large and small specs in the S&P 500 futures markets do remain short. Now, the 52-week Z-score has lifted from those March lows, but net positioning is still short. So got a few questions about this one this morning already. And what I think is playing out here is that, this dynamic of the retail traders being bullish, I think that's largely being seen here in the options market, while the larger institutional investors remain cautious, and I think that they are expressing that view in the futures market. This is just my opinion. I think the futures market tends to be a little bit more complex and a little bit more sophisticated, so that does make sense to me on an anecdotal basis. What we're seeing here, though, strictly based on the data, is definitely a tale of two sentiment gauges. As options traders remain excessively bullish, while futures traders remain cautious. Now, again, those futures traders could be hedging portions of their portfolios, right? They could be net long individual stocks while short futures as a hedge against it. Regardless, it's an interesting dynamic that's playing out in the market and has continued to play out over the past few weeks here. At the same time, the VIX does remain elevated. Taking a look at the volatility index, right? Here's your big spike into the March lows, right? Excess fear in the market. VIX spike to the mid 80s. And now it's subsequently pulled back as the S&P 500 has rallied, but it certainly remains elevated, right? We're still up here around the areas that have marked peaks over the past 5 years. In my note, I have a 10-day moving average of the VIX, and that too is hovering around these areas that have marked peaks over the past 5 years. So still some signs of risk aversion. If you look at futures positioning, if you look at the VIX playing out here in the market, despite that huge rally off the March 23rd lows. So certainly a lot of moving parts to the sentiment and positioning portion of what's going on here in the marketplace. And that's playing out after a big run off those March lows as the S&P 500 struggles with that gap that opened up around the 3,200, 3,150 levels. So be interesting to see how that plays out. Futures, as I said, are lower this morning. Do we get kind of a stalling out and a correction through time, if you will, or do we get something deeper? Continue to monitor those levels, right? 3,000 to 3,100 being the important near-term level in the here and now. And then finally, something that's caught my attention is equal weight S&P 500 seeing waning relative strength, right? Rally with the market now back below the 200-day moving average, close to an oversold position. But what I'm focused on is this relative strength, right? When investors started to get a little bit more excited off the lows, when people started talking about a rotation trade and broadening participation in the market, this ratio started to lift its head. It has subsequently begun to decline again in what looks like a false breakout. This to me is a sign, once again, that leadership is becoming more and more concentrated in the biggest stocks in the market. You're certainly seeing it, a lot of people starting to talk about it, and it's definitely playing out here. To me, I would love to see this ratio move higher as a sign of broader participation and broader performance. So far, that just does not seem to be the case. So that's going to wrap us up for today. Head over to shakenanalytics.com/test drive, where you can sign up for a free 14-day trial. Have a great Wednesday. I will be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.